Straight into business now. Charles Pellegrin is here. He is starting today in Hong Kong. Saw the world's biggest listing so far this year today.
Shares of Chinese electric vehicle battery maker CATL in high demand on its first day of trading on Hong Kong Stock Exchange. The listing had shares at 263 Hong Kong dollars apiece, and they are currently trading at over 309 Hong Kong dollars as we approach the end of the trading session. This means the company has raised at least $4.6 billion. The firm is already listed in mainland China on the Shenzhen Stock Exchange, but it's hoping to increase its international footprint with this IPO. The company has said it will use these funds to build a factory in Hungary, which will supply batteries for automakers like BMW, Stellantis, and Volkswagen. This would be the group's second plant in Europe after the one opened in Germany in 2023. Let's listen to chairman and founder Robin Zeng.
The Hong Kong stock listing shows our deeper integration into the global capital market and marks a new starting point for us to promote the global zero-carbon economy. CATL is not just a battery component manufacturer, but also a provider of system solutions. It is committed to becoming a zero-carbon technology company.
So CATL then in high demand because it's the world's largest electric vehicle battery maker.
It's known incredible growth ever since it was founded back in 2011 in the Chinese city of Ningde in Zhejiang province in the east of the country. It now employs over 100,000 people and has 13 production plants around the world. And in terms of global market share, last year the Chinese company is leading the pack with almost 38% of global battery usage, way ahead of its closest rival, another Chinese company, BYD, at 17.2%. As you can see there, Chinese, South Korean, and Japanese companies completely dominating that market. And CATL is among the most innovative firms in the field. Last month, they unveiled a new battery that can charge for 520 kilometers in just 5 minutes and 1,500 kilometers on a full charge.
So investors showing a lot of interest then, despite geopolitics, Sean.
The fact that this is trading during a bit of a truce in the trade war between the U.S. and China has helped, with U.S. investors buying up the stock through offshore accounts, as onshore ones were restricted. What has also helped is that more than 2/3 of the company's revenue comes from the Chinese market itself. So that shields it quite well from any negative impact of tariffs, for instance. There will definitely be roadblocks, though, if they are looking to expand in the U.S. market. Back in January, the U.S. Department of Defense, the Pentagon, added the company to a list of businesses it says works with China's military, which CATL has denied. In spite of this, CATL is a major supplier of companies like Tesla, showing that the Chinese firm is almost unavoidable in this sector, which is seen as essential in the transition to a zero-carbon economy.
Talk about the Asian markets then. What are the wider ones doing, Sean?
Well, let's have a look at the Asian markets and how they're doing. They're on the rise this Tuesday. This is China. Has cut its key lending rates by 10 basis points in a move to boost the economy. As you can see there, the Hang Seng leading the gains with that IPO for CATL. Let's also have a quick look at the European markets and how they've opened this Tuesday. They've opened higher after a muted start to the week. The DAX in Frankfurt leading the gains. The 50 in London leading the gains almost 0.25% higher.
Change direction now. We're going to go to Brazil. It is racing to contain its first confirmed outbreak of avian influenza at a commercial poultry farm.
The country is the world's top exporter of poultry and the top source of imported poultry here in the European Union. Analysts are warning that if Brazil's outbreak spreads, it could cause exports to drop by 10 to 20%. Brian Quinn has the details.
In southern Brazil, a poultry farm is sealed off. Its birds and their eggs culled, incinerated, and buried in a trench as the country races to contain its first confirmed outbreak of bird flu.
There are no more chickens on the farm. The property has already been depopulated. The process of disinfecting this property has also begun.
Brazil is the world's largest poultry exporter, with more than 5 million tons, accounting for some 14% of global production. China takes 10% of that output, the EU 4.5%. Both have suspended their imports of Brazilian chicken, as have Mexico, Chile, and Uruguay. Brazil's agriculture minister is hopeful that the cull will be effective.
Our aim is to be as transparent as possible so we can re-establish trade flows with one country after another as quickly as possible.
The current bird flu variant, H5N1, first emerged in China in 1996. Since 2020, though, outbreaks of it have surged, spreading via migratory wild birds and jumping to a number of mammal species, including dairy cows, seals, and big cats, as well as humans. An H5N1 epidemic in the U.S. forced authorities to cull tens of millions of laying hens, sparking skyrocketing egg prices. The conditions of modern factory farming, in which thousands of animals are crammed together into small enclosed spaces, are seen as one of the key drivers of increasingly frequent outbreaks of zoonotic epidemics like avian flu, and a likely factor in the next global human pandemic.
A story we'll definitely be following for you here on France 24.
Good to know. Charles Pellegrin, thanks very much, our business editor on France 24.